we're starting to see reactions coming through both in the forward markets, which are the FFA markets, and more interestingly in tanker equities and tanker stocks, which tend to react, in real time to these developments. What's come through so far is that the VL segment, the VLCC segment, is showing some level of softness and some level of stress, and I think that's explicable because there is a 10% tariff rolled into it on China as well. And China, as we know, is a big buyer of crude and it buys a lot of its crude on VLCCs. Right? So there is the potentially detrimental impact on Chinese economy from these tariffs. I was looking at it the other day. China is a lot more dependent on the US as a trading partner, indirectly through Vietnam and Mexico now. So, and obviously it's becoming a much more export dependent economy, despite what the government wants to do. The share of exports to GDP is almost 21% in China. So there's a great level of uncertainty and potentially bearishness on the impact coming through from China and BLs on the smaller segments, which typically are involved in the North American crude trade, which are the Aframaxes, which tend to lift cargoes from east coast of Canada and west coast of Canada. There hasn't been too much of a reaction so far, but I would anticipate that unless there is a massive cutback in Canadian crude throughput, which at 10% tariffs, it looks a little bit unlikely. We would think that a lot of that crude from the east coast and west coast of Canada would start to go further away. And likewise, Mexican crude would also probably start to bypass or not go into the US at all and start to go into longer haul.